Hi, everyone. This is Rob Roy from Elliott Wave Options, and welcome to this week's U.S. market update. As we do each and every week, and as you see on your screen, those are the stocks that we'll be featuring in this recording. And if there's a particular stock you're interested in, you can go directly to it using the chapters feature in this recording. All right, so let's take a look at the chart. First thing to note is that I am showing the new version of the Hub software. And if you haven't gotten a copy of it yet, you can go to hub.com. That's HUBB.com. It's in beta form right now, and you can get a free copy of it and follow along. It has live Elliott waves, so if I show the link over here, you can switch this. I like to look at the 3-minute chart of the markets, and down here it says you need more data to show it, so you just compress it, and then boom, you get actually live Elliott wave on here. So once again, if you haven't gone and gotten a copy of it, go to hub.com and get your free beta copy of it. It's really cool software. So many other neat things to show you. There's a whole themes area. You can post your own trade ideas and have people vote on it, etc. It's really cool. All right, so getting back to the markets. Down day today. Last night was really wild if you're up late like I am. When Israel retaliated on Iran, all of a sudden we had notes that there's explosions in Iran, the futures tanked, everything went down, and then things recovered. And by the time we opened, the futures were back to the upside on most of the markets. But it was a wild overnight scenario. So as you can see on this downward move in the correction, the move to the upside was a little less of an angle than the move to the downside. In other words, a higher percentage move lower, which goes back to the old adage that the market takes the stairs up and the elevator down. But the key here is that the wave 4 is corrected almost to the 38.2% level, but we're past the 23.6% level. And why that's key is Elliott in his writings would give note to the 23.6% fib level because it is a Fibonacci level, but he didn't really consider a corrective move until we got to 38.2. And since we're nearing that now, in Elliott's words, if he was here, I think he would say we are definitely in a correction. And you can see the labeled 4 there. So at this point in time, we want to kind of put the moving averages on and see where do we exist here as far as overbought, oversold. We're a little separated from the 10-day moving average, but we do have that 1030 cross. Saw the comment last week from floor trader comments that, yes, that is what the floor traders look at. That's where I got it from. And that's what the floor traders look at for a change in trend. So we've had that change in trend. We've had that cross between the 10 and the 30. The fuchsia colored line is the 30-day moving average. We've broken below the 50-day moving average, which is the royal blue line. So we are in corrective mode here on the SPY. Now, we did break below that 500 level, which there was a potential for that to hold as support. You can see that this gap existed right here back from towards the end of February, middle towards the end of February. We filled that. And now you look, okay, where could the next area of support be? Maybe we get a little bounce early in the week because we're slightly oversold. But it does seem that we are destined on the SPY now to head down to the next point of major support, which is around 475. So in that 475 to 480 range is kind of where it looks like we may want to go on the SPY. But we want to keep an eye on this crossover to see if we get any more of a correction along those lines. You all know that with the data that's been coming out, the Fed has no reason, and we had good economic data. The economy is still strong this week. So where is the impetus for the Fed to cut rates? I just don't see it. We have that PCE report that comes out on April 26th. So we'll be able to share that with you next week in the market recording and see how the market reacts to that. If it's a hot number, meaning showing inflationary signs, I think the market goes lower. If it's really tame, then maybe we can start looking towards pricing in a September rate cut again. And maybe that's the end of the corrective move and we start to move to the upside. But between now and then, there's really nothing that I see that could be a major market mover to move things, other than something like last night, some unexpected black swan type war type event. But Israel said, all right, they're done. They've retaliated. Iran says they're not going to answer the retaliation. So if we take them at their word, that situation calms down just a little bit. And maybe we don't have any more surprises like we did last night. But kind of in no man's land right now. Maybe we just move back up to this big round number of 500, but breaking that was significant today, breaking and closing below that 500 level on the SPY. All right, so taking a look at some of the other charts, an important one to look at is certainly the TNX, where we've had this relabeling. I mentioned that we were likely to relabel on the TNX. I didn't necessarily expect it to relabel to a wave 3, which it did. We had this B wave correction awfully close to the 61.8% level, which means 100% extension, and we're kind of going sideways through there. Now the question becomes, do we move up to the next extended level, which is 161.8, which brings us back to the highs on the TNX, highs in rates approaching 5% on the 10-year, which would not be good for the equities markets, the Qs specifically. But it seems like that's a possibility. Now, oftentimes, but not always, when you're going to go to an extended C wave, you come back and test the previous fib level. Now, if we can get the rates to come down to 61.8, maybe we have a short-term bounce in the equities market, but I would be very cautious of that because, again, the likelihood is that we may end up back up here near 5% on the 10-year and testing those highs from back at the end of last year. So that's a difficult hill for the markets to climb. Taking a look at a chart of the VIX, if we take a look at the VIX, you can see that, yeah, there's the spike. All right, so we're starting to get some volatility in the markets. And yes, Elliott Wave does label the VIX. Some people have said, oh, it doesn't work on the VIX. The VIX is a chart, and the Elliott Wave algorithm is going to go through and label this. I've mentioned this before. This software, there's a lot of Elliott Wave softwares out there. This one in particular labels Elliott Wave exactly as Ralph Nelson Elliott wrote it. There's other Elliott Wave softwares that have personal adaptations. But if it's a chart, the Elliott Wave is going to try to find a pattern. Sometimes it does, sometimes it doesn't. But in this case, big move to the upside on the VIX. But now we're getting to a point where we're slightly oversold on the SPY. We're getting to a point of resistance here on the VIX. So maybe we can get a little bit of calm at the beginning of next week, and then we assess things and see where we go. But note, even in yesterday's chart of the VIX, we did touch the 10-day moving average. So you could look at the high of the day and say, well, that separates you from the 10-day moving average. So there's pretty good separation here. So maybe just some calm here for a couple days would be warranted. And we'll see how that continues to play out. The dollar is still in an upper end of things. We'll look at the dollar in detail next week. But gosh, we don't want to see the dollar go back up to those previous highs. Let's look at some of the other markets here in the U.S. The Dow now is becoming the place to be. And that goes back to what I was talking about at the end of the year when we had this big rally here. Now you can see this move in November from just above 350 up into that area here around 380. That's a pretty vertical move. And now we're here testing that level on the DIA. Note that we are at the 38.2% fib level on the wave 4. There's some congestion right here. Maybe we hold. We only hit the 10-day moving average on the high, so we weren't able to break above it, even though it was a better performing market than the rest. I think that's a flight to safety, just as I expected as well. Towards the end of last year, money was moving in. That's why we had this greater than 45-degree angle move. That money is rotating into the Dow from a safety standpoint, expecting the economic data to be a bit worse than it was in the first quarter. The first quarter was still okay, but now we're starting to see chinks in the armor, and we're already back down here. But now the DIA is outperforming the SPY, where it was underperforming for a time following the beginning of the year. So the angle at the beginning of the year was less high on the percentage standpoint than the SPY was. But now maybe the rotation in the markets is saying, all right, let's get out of this high beta stuff and move into something a little bit safer as we move forward. So I think that's something to bear watching. Looking at the Qs, and I noticed that one of you commented that the Qs, when they fall hard. You were spot on. The Qs hung in there for a while. They really did. For 2 months, we went sideways around this 440 level. And you can see how the Elliott Wave algorithm just absolutely nailed that high in the Qs. Just spot on, right smack in the middle of that tap box. And then we tried to hold it. We got that bearish cross in the 1030, and then bam, to the downside we went, and a real vertical breakdown. We are separated from the 10-day moving average, so that plays into maybe we can start the week with a little bit of a bounce. There's the previous wave 3 high, which is right about where we were on the low today, trading near the low of the day at the end of the day. So we have some support there from the previous wave 3 high back at the end of January, and perhaps a little bit of a bounce up to, I don't know that we make it up to the 10-day moving average, but there's a little bit of resistance here around 420. So maybe we get a little bit of a bounce from 415 up to 420, but I don't see much more than that right now. So that's kind of what we want to watch on the Qs at the beginning of the year. And then we looked at the IWM. And last week when we were talking about this, I made the comment that it looked like we were headed back down to 190. We're almost there. You can see that with the move lower on the day, we're almost right at 190. So we went up and tested that high. Once again, the algorithm nailing that high on the IWM, just right smack in the middle of the tap box, which stands for time and price projection. We've had this range between 190 and 210. So we got up here. We hit it in the beginning of March and right here at the end of March, early January, and then moving down. So been kind of pretty accurate on the IWM. We'll have to reassess things once we get to this 190 level. Isn't it interesting how that coincides with where the previous wave 4 is? If you're familiar with Elliott Wave rules, if the wave 5 extends less than 100%, you move back to the previous 4. And so that coinciding with the 190 level means I really feel like we'll touch 190 next week. Now, maybe we can bounce from there as well. But when you look at these two things, you're thinking, oh, gosh, maybe we're going to get a little bit of a bounce, and then we have to adjust. Is there more downside to come? We're just kind of treading water, trying to find our way until we get to that PCE report. That's going to be the next major market driver, and no doubt in my mind about that. All right, so switching rather quickly over here to the legacy software to show you Bitcoin, because it is halving day. And if you're not familiar with that, that's when Bitcoin gets cut in half. In other words, the supply gets cut in half. I actually have a countdown clock here. So the estimate here is for the halving to occur at 9:02 p.m. Eastern time tonight. And that's what we're looking for as far as when this halving might occur. If we go back to the chart of Bitcoin, you can see that we've been in a trading range here. We've been talking an awful lot about this on TradeFinder over the past couple of weeks. And by the way, if you haven't registered for TradeFinder, you can do it with the link on your screen now. And we've moved it to live market hours. So it's at 1 p.m. Eastern time now on Tuesdays. Love to have you. And we've got a special guest coming up this week. So you really want to join us this coming Tuesday. Again, if you haven't signed up already, do it now. We have the Bitcoin expert that I go to. I don't consider myself to be a Bitcoin expert, but if there's something that I don't feel that I'm adept at, I go find out who is the expert in that field. And we're going to have the expert that I think is the best in the crypto world as a live guest on this week's Tuesday TradeFinder. So again, 1 p.m. Eastern time, use that link to sign up. It's going to be a fantastic show, and we'll have him post-halving. So be interested to hear his commentary there. So special TradeFinder coming up this week. All right, so when we go back and look at the chart of Bitcoin, you can see that we have this flag pattern. We had a vertical move. That's the new school flag pattern where you have a rectangular shape. We did have a little triangle formation here. I used to be a golf pro, as some of you may know. It seems like forever ago now, but that was back in the days when we had triangular flags on the flagpole, and that was viewed as the flag pattern. But now the new school seems to be more on this rectangular form. It doesn't really matter whether you look at it from a trading range on a rectangular standpoint or a symmetrical triangle. Something's getting ready to happen in Bitcoin. Last halving, we took off. Sometimes we've had in the previous, this is going to be the fourth halving that's occurred. Sometimes we have a drop down first and then a rally. So once again, I can't wait to get the commentary from our Bitcoin expert on Tuesday. And then when we look at Ethereum, which a lot of people think is going to be a place to be post-halving, we're in a descending triangle. Just as a reminder, regardless of what you read out on the internet, a descending triangle does not mean you're going to break to the downside any more than an ascending triangle means you're going to break to the upside. Done a lot of work on triangles over the time. I wrote a book on this. So a lot of research. Any triangle, ascending, symmetrical, or descending means you're going to break out. So we could break to the upside. We could break to the downside. You don't know. But something's getting ready to happen with both Ethereum and Bitcoin. And of course, it's no great shakes to think that's going to happen, right after the halving occurs. So I did want to go through and show you these. By the way, if you're wondering why I went to the legacy software, we have over 200 cryptos that we're going to be able to have live charts with on the new platform. But the data provider didn't have the technology to integrate the data with our platform. So our programmer, or not ours, but the hub programmers are working with the data provider programmers so that they can make their data talk to the software. So that'll come very soon. So that shows you, I think, how forward thinking this software is. So you definitely want to partake in it if you haven't already. Once again, it's for free. All right, so let's go ahead and take a look at some stocks of interest. And by the way, read all of your comments. And as a reminder, I've talked about this before, but every month this year, we're giving away a free subscription to our L3 platform, our L3 portfolios at ewotrader.com. That includes our new AI-based infused. We've had 7+ months of gains, not a losing month yet. I'm not going to say that we're not going to have a losing month, but we haven't had one yet. The volatility portfolio, which is breakouts of triangles, and our AI-based time strategy, which is for sideways movements. So all market conditions are covered in this platform. And the only thing you have to do to register for this is to post a comment underneath this video. Just post a comment and you're automatically in the drawing to give away a free one. You can say anything you want. You want to talk about the market, behind the scenes of these recordings, the one that makes me look good with all the little doodads that come up and etc. is Ryan. His son's birthday is today, Blake. So just say happy birthday, Blake. Anything that you do will get you registered for the drawing. Just some sort of a comment underneath here. All right, so taking a look at Tesla. Got this one pretty spot on here as well. I had to hold 180. I mentioned if we broke 180, it was, where do we go from here? It could be a Katie bar the door scenario. If I condense this chart and bring it in quite a bit, there's those lows down at 100 from early 2023. Other than the wave 5 forecast, they're around 125. I don't see anything to stop it from going to 100. There's just no positive catalyst. Elon tweeted that he's cutting 10% of the workforce. Now we have problems with the Cybertruck, which was a key thing. An accelerator, yeah, that's a bit of a problem if your car goes when you don't want it to. So there's just no good news coming out of Tesla at the moment. So I think highly likely that we at least go to 125. Then we'll see if we go to 100. Note that the bottom of the tap box here, the time and price projection, is exactly at 100. So the Elliott Wave could hit the previous support level of 100. And the last time we got to 100, Tesla took off. But I don't know where the catalyst is to go long Tesla right now. We're a tiny bit oversold. Maybe we get a little bit of a short-term bounce, but that's all it would be. And perhaps if you get a little bit of a bounce, it's a good short entry to the downside. Then let's take a look at Boeing. It's another one that's just had as much bad news as you could expect. It is trying to calm a bit. We broke below 180. There's not a whole lot of support below this on Boeing either. So if I go through here and condense this chart on Boeing, you can see that 125 could be an area. There's just nothing to stop it in between. Look at how vertical this move was to the upside here on Boeing as we move from the end of October up here to the beginning of 2023. It was just a pretty vertical move, which means that there is nothing to stop it on the way down. Now we got a little bit oversold from the 10-day moving average. We bounced up. That's what could happen with Tesla. So this is all the kind of bounce that I would see out of Tesla. The same thing here, but even with Boeing, we're still below the 10-day moving average. And to go long Boeing, we have to at least get back above 180, and then that might just be a short-term trade back up to 200. But if you're looking for something longer term and you're interested in Boeing, I don't think you go long Boeing until we're back above 200, and we'll have to wait and see when that plays out. All right, Coinbase. We talked about how Coinbase had the regulatory issues. That's going to take some time to go through. Can this halving that occurs in Bitcoin put a little bit of a bid back into Coinbase? Maybe, because most people think that a lot of the other cryptos are going to be pulled along with Bitcoin if it does rally post-halving. So maybe we move up. We did have a breakdown from that triangle, as you see on your screen. We're trading right through that 50-day moving average. The support level here is at one of those big round numbers at 200. So we're kind of hanging in there right there at the 200. We're right at the 38.2% fib level correction. If Coinbase is going to hold, it's going to hold right here. This would be the area where it would try to hold. Whether it does or not, I don't know. But if we do get a rally in the cryptos, then perhaps from there you go. Now, even the cryptos are subject to surprising news. I mean, last night I was talking about what happened in the futures in the market. Cryptos went down. Bitcoin went down back to 60,000 when that first news came out. And then by the time the market opened today, we're back up at 64. So that was a big, quick move there on Bitcoin. So even that happened. But boy, we'll have a lot to talk about next week in the whole crypto world. So getting back to one of the symbols that y'all asked for was Amazon. So once again, I read every comment that you post. I answer as many of them as I can, time permitted, travel schedules permitted. But Amazon has even given in. And there's an old expression, once the generals fall, that's the market leaders, then you know you're in a correction. So I think it's clear that we're in a correction. Now with Amazon, we've got some things to talk about here. We did break below the 50-day moving average today. We're a little oversold, not significantly so. It tried to hold in there. It was performing better for a while than the rest of the market. But what bothers me on Amazon is, boy, you have to keep that gap there in your mind for where we may go from here on Amazon. So you take a look at that and wonder, are we going down into that area of potential support around the 160 area? That gap is going to get filled at some point in time. Our AI data tells us 94% of the time gaps get filled, but we don't always know when, sometimes sooner rather than later. But we want to watch 170 is the next level of support for Amazon. If we can hold there, then we'll be okay. I'm just going to show you a bonus chart here real quick on Netflix. It wasn't on your screen, but I think it bears talking because of the market in general. Netflix had a great earnings report last night after hours. They blew away the numbers on both earnings and revenue. They boasted a 16% increase in subscribers, and look what happened to the stock today. This is an area where you get into bad news is good news or good news is bad news. So when the market's going up, even bad news is good news. But now perhaps we've switched and even good news is viewed as bad news. And I think that's the case of Netflix, which kind of goes into the area of man, we are in a corrective move. And we look at this, and there's a gap there. Is Amazon going to go down and fill that gap? I don't know. We're definitely oversold now, short term. So I don't think that happens quickly. But if interest rates stay stubborn and we don't get a good PCE report, we show inflation in that PCE report, then we can move lower. And one of the big drivers on that PCE report is going to be energy. And so let's take a look at oil. And we take a look at the chart of oil. We went up and hit that double top. I joked last week that filling up the Hellcat is not a lot of fun at the gas pump right now. You all know what happens with oil. When the price of oil goes up, it seems to be reflected at the gas pump the next day. When oil comes down, it takes weeks or months or prices come down. At least we're getting a little bit of a break here in the price of oil, but there is some support there at 77.5, and that's worrisome as well. And this big move up in oil, how is that going to be reflected in that PCE report? Can it come in tamer than expected? It's hard to imagine that can occur. So if we don't hold 77.5, then we're back down to 75 on USO. But there's a chance that 77.5 may hold. I know a lot of people think we're going back to $100 a barrel in oil. Maybe we are, but we did double top, at least for the short term here, with the high back from last fall and the high then again here in April. But perhaps we get a little bit of a bounce in USO. Once again, not good for the markets or that PCE report if we hold 77.5. So something to keep an eye on there. I know a lot of you like TLT. I show TNX every week. Periodically, I show TLT. I like to do that as well because that's a little longer term on the curve. And now TNX is showing you rates. TLT shows you prices. And remember, in the bond market, prices and yields move in inverse proportions. So if prices are going down, that means yields are going up. So now we're starting to get a move back up in rates on the longer end of the scale. So that's not going to be good for housing, which has been keeping alive here and keeping the economic numbers pretty good. But when we look here, we can see that we had a little bit of support there at 92.5. We broke below that and we're going sideways. But if this wave 3 continues down and we see TLT come down, which I suspect is likely in the cards, that would follow along with TNX showing rates going up to those previous highs and getting that 10-year near 5%. Then perhaps we're going to see rates moving higher on the long end as well. And at some point in time, all of that will work through, and then we'll start to get to see some better numbers from inflation. But maybe that's going to take some time, and the equities markets where things are going to suffer while all that occurs before we get to the point where we start having some sort of a realistic idea of when the Fed may cut rates. So I think they're on hold for now. We watch this stuff play out with the rates, and we see where things go from the markets itself. So let's look at the metals. GLD, boy, did it spike last night with that attack from Israel on Iran. But we're still holding at this 161.8% extension, which is a very extended level. So I want to highlight this. You can see the B-wave correction in the zigzag pattern was at 33%. So call it the 38.2% level. That means that your target is 61.8. Well, we blew through that. The extended level is 100%. We blew through that. So the next extended level is 161.8. So my only point here on GLD is that we are very extended on this zigzag. And it's fairly vertical. You can see from the angle of the arrow that I have on the screen. So I do think we get a little bit of a pause in GLD, barring any other unexpected war type things, black swan events. Perhaps gold goes a little bit sideways for a bit, calms down a little bit, and then we look to see if there's another run. The gold bugs are out there saying that, oh, we're going to 3,000 in gold. Maybe we do, but I don't think that happens immediately. I think we need a little more calm here in the gold market, and perhaps that occurs over the next couple of weeks. If you are a gold bug and you do want to see gold move higher, you still want it to consolidate, because as I've talked about numerous times, when you break a major point of resistance, major moving average, break out of a triangle, whatever, if you do it and you're already overbought, then it tends not to hold. So if you want to see gold move higher, you want to see some consolidation here and then break, then that has a higher chance of holding and moving forward. The more vertical you go when you have corrective moves, the more severe the correction can be. So that's an interesting chart there on GLD. So that wraps things up for this week. I hope you have a great weekend. I know that last night was kind of wild. Once again, if you were up watching the news, but all that seems to have calmed down a bit. So maybe we can have a relaxing weekend, and we'll see what happens with the halving. And we'll be talking about that at the beginning of next week. So enjoy your weekend. Look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.